Yeah, I mean, on the street, the consensus view is that, FedEx really dropped the ball in execution. And I think at this point, a lot of the analysts are very wary of them, despite all the promises they're making. And they do like UPS a lot more because UPS actually has a sort of a smaller footprint strategy, which has really helped them to maintain their margins and not really run into trouble as FedEx has just done. But there are a couple of tailwinds for FedEx that could rescue them. Obviously, one is the reopening of China, which could create a lot more volume, as you referred to, the Lunar New Year. Then the fact that the oil prices have dropped so sharply since even they warned a couple of months ago, that could provide a little bit of margin relief for them as well. Stock is very cheap at 12 times earnings. 2.5% dividend effectively, and they've always essentially raised their dividend. They have 30% payout ratio, so they're in relatively decent shape financially. But the big open question is execution, and of course the secondary question is, are we going to get a massive global slowdown in 23, which will destroy any kind of forward guidance that they have at this point?
Oh, sure. So Boris,
yeah, I was going to say it's definitely not a stock that you're going to be looking to do for growth, but it may be obviously a long-term value play at this point.
Do you have a preference? Would you look to own UPS here, or do you think both of them you just have to wait and see?
I think, the good thing about FedEx is, as everybody said, is a lot of the bad news is priced in. And if they can actually show on this conference call that they have some improvement in execution, they'll probably get tremendous amount of investor re-interest in the play. One of the ways you might want to play this is just to simply sell, 160 puts, which will put you into the 155 cost basis at this point. They're about $5. And if they expire worthless, it's like a 30% annualized return. If you do get put stock to you, at least you're having it put at a very decent price.
All right.
And FedEx is certainly going to be here to stay.
And Frank, we should put that 2-year chart back up, but it shows that UPS is basically flat while FedEx is down like 40% in that period of time. I don't know if that coincides with Carol Tomei taking over, but that is a remarkable gap there.
Hey, Kelly, one other factor here. FedEx has the bigger business over in China, as we mentioned before, and Boris referenced Rahmanyan's forecast that we're going to enter a global recession. If China actually has the ability to reopen, FedEx would be a bellwether there. They would have a lot of insight to that business because they have so many facilities and workers there. And what they say on the call would not only likely move UPS, but also the trucking market here in the U.S. As I mentioned, they're one of the biggest truckers here in the U.S. and other companies that are levered to the reopening of China.
Absolutely. No, it's a great point. We're about to talk more about that with Nike. In fact, guys, thank you. Frank Holland, actually, Boris, stay with us. We really appreciate it. As we turn to shares of Nike, down 40% themselves this year as they battle inventory backlogs and inflation woes. But it is slowing demand in China that has hit them the hardest. After all, China is about 17% of their annual revenue, probably more of their earnings. CNBC senior markets commentator Michael Santoli has the story here. Hi, Mike.
Hey, Kelly. Well, expectations for the current quarter for Nike and also for the current fiscal year have been knocked down since September by about 20%. So clearly the bar is lower. That's after Nike did give that reduced guidance. Mostly it was about inventories, much heavier than expected, and the margin implications of trying to clear that inventory. One of the big questions in the report today and in the guidance is, did Nike kind of take the pain already with that guidance, and maybe they've done better on realized selling prices than a lot of analysts anticipated? Obviously, China, you mentioned, a big element. Looking for stabilization there. I don't think anyone's talking about a big pickup in activity, but that's going to be all about how they're thinking about fiscal 2024, frankly, because the current fiscal year 2023 is already underway when it comes to a comeback in China. And then currency, obviously the stock doesn't principally trade on that, but it's become more of a tailwind since the last guidance was given. That was in September. The most relevant currency pairs, dollars weaker against those things. That should be at least a little bit of an offset or help. One other issue, some of the analysts are talking about, Kelly, that maybe there's some market share advantages from Nike out of the dissolution of the Adidas Kanye West partnership, Yeezy sales. Some of the full price new releases from Nike may be sold better than expected because of that.
Yeah, I know parents in town whose kids wanted Yeezys, and then it was like, no, you can't, you're not buying those anymore. They got to wear something. Boris, I'm surprised. Is it true this company still trades at a 34 forward multiple?
Yeah, it's a global premium brand, and you pay a premium price for that. But they really kind of, I think, in some ways deserve it. I mean, they've just been a tremendous performer. And Mike is absolutely right. They could get a little bit of benefit out of the Adidas woes as we go forward. Certainly, China reopening is going to be a tremendous boon for them because that will burn down through a lot of the inventory build. And the most recent responses, according to a lot of the analysts on the street, is that consumers have actually really responded to a lot of their promotions well. So should be doing well. Finally, one last thing I think is kind of interesting is the whole World Cup story. So, Messi has been the ambassador for Adidas, but Messi's kind of like the face of a soccer past. What's really interesting is that Mbappe is an ambassador for Nike, and I think that kind of tremendous amount of fuel going forward is underappreciated at this point, especially with the incredible World Cup that we had and tremendous amount of interest that we've had globally. I think they may get tremendous benefit out of that. So there's a lot of things positive going for them over the next month or two, and I think, like you said, they kind of really undersold their problems so that they can surprise hopefully to the upside as we go forward.